In this video, I'm going to discuss about shareholder ratios. Shareholder ratios are financial metrics that provide insight into a company's financial performance from the perspective of its shareholders. These ratios measures how effectively a company is generating returns for its shareholders and how the company is managing its equity. These are the shareholder ratios we are going to discuss about. Earnings per share, price to earnings ratio, dividend yield. Earnings per share, EPS. Earnings per share is a measure of the company's profitability that indicates the amount of earnings attributable to each share of the company's common stock. Common stocks means ordinary shares. Earnings per share is calculated by dividing the company's net income by the number of outstanding shares of ordinary shares. This is expressed as earnings per ordinary share. A higher earnings per share generally indicates that a company is generating more profits and is a more attractive investment opportunity, while a lower earnings per share may indicate that a company is facing financial difficulties or its growth potential is limited. This is how we can calculate the earnings per share. Net profit minus preference dividends divided by the number of ordinary shares. Net profit is equal to profit after interest and tax. Preference dividends are the total dividends paid for the preference shareholders. We have to deduct this amount from the net profit amount. Number of ordinary shares is equal to total number of ordinary shares. These are also known as equity shares. Now let's do this example. We have to calculate the earnings per share. Earnings per share is equal to net profit minus preferred dividends divided by ordinary shares. So what is the net profit? They have given us the profit before interest and tax and interest and tax. We can calculate the net profit using these values. So the net profit is equal to profit before interest and tax minus interest minus tax. What is the preferred dividends, which is this amount 500,000? What is the number of equity shares? 150,000. So the earnings per share is equal to 12.6. This is the dollar per ordinary share. Now let's discuss about the price to earnings ratio. This is also known as the PE ratio. PE ratio is a valuation ratio that compares the current market price per share of the company's ordinary shares to its earnings per share. This ratio provides insight into how much investors are willing to pay for a company's earnings. A high PE ratio generally indicates that the investors are willing to pay a higher price for the company's shares. A high PE ratio generally indicates that investors are willing to pay higher price for the company's shares relative to its earnings, indicating that the stock may be overvalued. Conversely, a low PE ratio may indicate that the stock is undervalued, as investors are willing to pay less for each dollar of earnings generated by the company. This is how we can calculate the PE ratio, which is equal to market price per share divided by the earnings per share. Market price per share is the current price of an ordinary share. Now we know about the earnings per share, which is equal to net profit minus preferred dividends divided by the number of ordinary shares. Now let's do this example. We have to calculate the PE ratio. PE ratio is equal to market price per share divided by the earnings per share. So what is the market price per share? They have given us the market price per share $25 per share. What is the earnings per share? This is the same example as before. So the earnings per share is equal to $12.6 per ordinary share. So this is equal to $1.98. Now let's discuss about the dividend yield. Dividend yield is a financial ratio that expresses the dividend payment of a company as a percentage of its current share price. It is calculated by dividing the dividend per share by the current market price per share and multiplying the result by 100%. This is how we can calculate the dividend yield. Dividend per share divided by the market price per share. Dividend per share. This is a portion of a company's profits that is distributed to its shareholders as a reward for owning the stock. So this is the return that the shareholders will receive from the company because they are owning the shares of the company. Now let's do this example. We have to calculate the dividend yield, which is equal to dividend per share divided by market price per share. We have to calculate the dividend per share. They have given us the annual dividend payment and the number of ordinary shares. Using these two figures, we have to calculate the dividend per share, which is equal to total dividend amount divided by the number of ordinary shares, which is equal to $2 per share multiplied by 100%. So the dividend per share is equal to $2 divided by the market price per share, which is $10. This is equal to 20%. Thank you for watching. See you in the next video.